All right, it's just after 12 o'clock now, Nigerian time, and I think we can get started. Good morning, good afternoon, depending on where you're joining us from. We want to welcome you very specially to this latest iteration of the Coronation Insurance webinar series. My name is Wale Famra. I'm delighted to be moderating today's event. Of course, today our focus is, just a moment. I apologize for that. Of course, today our focus is on the theme winning through insurance, the crucial role of insurance in safeguarding financial stability. Now, clearly, we are in an environment where things are challenging. Inflationary shocks that we have continued to experience over the month after month, over the last, I think particularly the last 9 to 12 months, have really rocked businesses and individuals. And clearly this is it's a moment where we begin to think about how we can adapt to the situation. Now, insurance can be a very important tool in adapting to situations like this. And we're delighted to have our keynote speaker and panelists join us today to add their voice to the conversation about how we can win through insurance in times like this. So I want to welcome you all from wherever you're joining us across the world for today's event. As is often the tradition at Coronation, we try to keep this a very efficient event. So we'd like to get started very quickly as I welcome now to deliver an opening address and to welcome you all formally to this event, the Managing Director and CEO of Coronation Insurance, Mr. Olamide Olajolo. I hand over to you now, sir, for your welcome address.
Thank you very much, Wale. It's very excited to be back here again to present this webinar. Good afternoon, distinguished guests. My name is Olamide Olajolo. I'm Managing Director and CEO of Coronation Insurance PLC. I would like to express my gratitude to all of you for accepting our invitation and then taking time out of your busy schedules to be here today. We truly appreciate your gesture. At Coronation Insurance, we are deeply committed to fostering thought leadership and facilitating discussions that empowers individuals and businesses in various sectors of the economy. Through our webinars, we strive to provide valuable insights and practical guidance to our esteemed customers and stakeholders. This webinar session is dedicated to the theme, as Wally rightly said, winning through insurance, its crucial role in ensuring financial stability. As we all acknowledge, the current economic landscape is very unpredictable, and unexpected events can threaten our financial well-being. In this section, we will explore how insurance acts as a safety net, helping us to navigate challenges and achieve financial stability. Throughout this section, we will delve into various facets of insurance and explore how it can serve as a powerful tool for ensuring financial stability. We are privileged to be joined by a distinguished lineup of speakers who will bring extensive knowledge and expertise to enrich our discussion. So we are delighted to introduce our keynote speaker and a very good friend of mine, Mr. Yinka Daudu, Assistant Director of Underwriting and Marketing at Africa Insurance Corporation, who will illuminate us with insights into the crucial role of insurance in today's dynamic economic landscape. Along with Mr. Daudu, we have three distinguished panels of speakers: Mr. Rotimi Adewale, MD, Sandvik Insurance Brokers Limited; Barrister Chris Owamana, MD, CEO, Orient International Loss Adjusters Limited; and then our own Augustine Anikwe, Head of Corporate Underwriting, Coronation Insurance PLC. Our panelists will share their expertise and engage in a lively discussion on various insurance solutions and their impact on achieving financial stability. So whether you are an individual seeking personal protection or a business owner seeking to secure your operations, this webinar will equip you with the knowledge to make informed decisions about your financial future and businesses. And once again, I want to appreciate everyone present here today and look forward to an exciting and inspiring section this afternoon. Thank you all for joining us today. Thank you very much.
Thank you very much, Mr. Lajola, for that introduction. And I think you have set the tone very nicely indeed for what should be a very enlightening day as we try to unpack how insurance can help us in these difficult times. So without further ado, I'd like to now introduce our keynote speaker as we get started with today's program. He's none other than Mr. Yinka Daudu. He's a distinguished chartered insurer, and his expertise span the full spectrum of the insurance industry, including reinsurance, underwriting, claims marketing, and broking. His professional affiliations are quite impressive as his academic credentials are. But I would like to save us some time and just highlight a few things. In 2006, his exceptional service was recognized when he was honored as the best office representative by the Chartered Insurance Institute of Nigeria. But looking back, his career journey began at the International Insurance Company, now known as ICO, where he made significant strides as a motor underwriter and later as a pioneer of its reinsurance department. His experience is vast, having contributed to companies like Coronation Insurance, Alliance and General Insurance, and many others. He's an alumnus of the prestigious Lagos Business School and is a lifelong learner. Ladies and gentlemen, please welcome Mr. Yinka Daudu as he makes his presentation to get things started for us today. So over to you, sir.
Okay, thank you very much, Wale. I think I would like to commend Coronation Insurance for organizing this very lofty webinar. It's very, very important. And for me, I see it as an avenue to continue to engage our various customers and other stakeholders in the industry. You see, the truth is we need to continually engage our customers to continue to create the awareness, and I'm very, very grateful, for making me part of this. So this morning, I have the privilege to be here. I appreciate Correlation Management and staff for this opportunity. And I've been told to discuss on winning through insurance, its crucial role in ensuring financial stability. I have about 10 or thereabout slides here, and I will try to take it quickly just to share my thoughts on this lofty topic. And so for today, we will, let me put it slide mode. Okay. So today, these are the table of contents. We look at the introduction, nature of insurance. Then we just describe briefly the types of insurance. We look at the two major classes of insurance, life and non-life policies. And then what are those crucial roles? What role does insurance plays in supporting our financial stability? How do we go about it? What are those crucial and important strategies that we can use to ensure that we are able to have stability in our finance at this crucial time? And then we will conclude. So first and foremost, it's important for us to try to break this down. What is insurance? What is insurance? People kept on asking, what is insurance? How do I benefit from my insurance? How does insurance work? You see, insurance is basically an agreement between two parties whereby one party agrees to assume the risk of the other. It's just as simple as that. And it's based on the payment of a premium, which is the consideration, because for every agreement, there must be a consideration. So the premium is the consideration, which enables the insurer or the underwriter or the insurance company, as it may apply to you, to pay to assume the risk, assume your business risk, assume your personal risk, and then in the event of any eventualities, they come to your aid, rather than you going through hard times and all those stuff. So it is a social device where many share the losses of a few by transferring a portion of the risk of loss to the insurance company in exchange for a specified cost, which is the premium, as mentioned earlier on. So insurance is very, very important and key to us. As a matter of fact, the late Professor Irup said insurance is one of the most ingenious human invention, that came out from human mind. Because you can imagine, if we do not have insurance, how do we live? How do we sustain ourselves? How will corporations, organizations, how will they sustain their operations? How do we as individuals, how do we sustain ourselves? How do we plan for future? These are the roles that insurance plays in our daily life as individual and as corporations. So it's a financial management, it's a financial risk management tool that can be used to reduce financial uncertainty and make accidental loss manageable. So purely, insurance is a risk transfer mechanism. It provides that platform that enables you to shift that uncertainty to an organization who are experts in analyzing the risk, who are experts in giving advice, who are experts to ensure that your risks are managed, and then you're able to focus on other things. So what is this nature of insurance? What is insurance is all about? Insurance is simply an avenue to enable you shift your risk to an organization that has been set up to manage that risk. So in insurance, we cannot talk about insurance without making reference to hazard. Hazard is present everywhere. Our life is full of risk. Hazards are abound everywhere. Both individuals and corporate bodies are faced with potential hazards every day. When we leave our home in the morning, we are faced with different types of hazards. We don't know whether get back home the way we have left. Yes, we pray, but something can happen. You can be very careful driving your car. Somebody can be very careless and just ram into your car. So we face hazard every day, and this can cause significant financial losses if we are not careful. I tell you for free, as we speak today, we are already managing about 4 major losses in the market, and each of those losses is between 2 to 6 billion naira. So you can imagine if there were to be no insurance for those companies. So properties are prone to losses or damage due to unexpected or fortuitous events, and it's important as individuals, as corporate organizations, to ensure that we try as much as possible to manage our risk. And one of the ways through which we can manage our risk is to ensure that we take insurance cover and move that unexpected or fortuitous circumstance to the insurance company. So we run the risk of causing injury to other people or damage to their properties. What happens if that happens? These are accidental things that can happen to anyone. So the consequences of these losses and misfortunes could be so large to make individuals become bankrupt. Talking about liability insurance, which we are going to discuss later in this presentation. Somebody could be taken to court for negligence. For not observing due care towards your neighbor. And, if the court gave the case an award damages, it could be very, very huge. And it could even make a company, to wind up in the event of, a catastrophe. So insurance is very, very important to us. It's very, very key. It enables us to face our day-to-day hazard. And then inevitable need for security. These scenarios has necessitated the need to manage those risks. And how do we manage the risk? It's either you want to eliminate the risk, you want to reduce it, or you want to transfer them. And as an individual or as a corporate organization, you need to analyze it very well. Are you safe if you decide to reduce it? Can you completely reduce it to the extent that it does not affect your operation as a corporate body? Can you eliminate it? Is it an integral part of your operations that, look, you cannot do without that risk? And so what do you do? Or do you transfer it? You will realize that maybe the best option for you is to just transfer those risks to an insurance company to manage them for you. So it depends on the individual. So it is important that we try to make provision for the inevitables. And then the evolution of humanity. This has brought about a complex environment and attendant risk. You know, the same goes with the growth of commerce and industry and technology. We are in an advanced world now. A lot of things is happening. Recently, we started discussing about climate change, and those climate change has come with the attendant risk too, with potential risk. Things are happening. You know, technology has also come with its own challenges. I mean, in the 80s, in the 90s, there was nothing like cyber risk. Now we are all faced with cyber risk, whether as an individual or as a corporate organization. So we are in a complicated society in which losses became more severe, you know, losses, you know, and that has necessitated the need for individuals and organizations and even associations to embrace insurance. It's very, very important, you know, because some of these risks we even assume them unknowingly, unwittingly, you know, but it's important that as a business venture, as individuals, we cannot but embrace the need for us to see how we could shift some of those risks to an insurance organizations and give us peace of mind. So insurance is very key to us. Then we've been talking about, let's look at the concept of risk, peril, and hazard I mentioned earlier on. Because you cannot talk about insurance without making reference to these three major concepts. Risk is the possibility of an event occurring that will have impact on achievement of objective, you know, and it is basically linked to uncertainty. I mean, we face a lot of uncertainty, even as a businessman, face a lot of uncertainty as individuals. And so we are all faced with risk every day in terms of operations, in terms of living our lives, the risks are there. Then talking about perils. Perils could be defined as the cost of the loss against which insurance cover is purchased. That is what actually led to that loss. I mean, there's something we can identify. For example, in auto accident, the collision is the peril. So as individual, it's important that we are able to identify the perils that could cause us to lose. I mean, that will cause us to have a sort of loss or damage. For
Mr.
example,
Dado,
yes.
sorry, Mr. Dado, if I may just request, could you switch to the presentation mode
Oh,
so
okay.
that the entire slide fits the screen? I think it would be much nicer that way.
Okay. Is it okay now?
Not yet. It hasn't changed yet.
Is it better now? It's already on slide mode from my end here.
Okay. It hasn't come up. It hasn't come up for some reason. But just go ahead. Just go ahead. I don't want to distract you, but I just was hoping we could make that change. Please go ahead,
Okay.
sir.
Okay. Let me do it again. Just a minute, please.
All right, sir.
Okay. Okay. Am I audible?
Yes, we can hear you, sir.
All
Go
right.
ahead.
Okay, so I was talking about perils, as a cause of the laws against which insurance insurance cover is purchased, and I was saying that it will be very, very important for individuals to identify those potential perils that could impact on them, that could cause either damage or make them to suffer any form of loss, even in the house, somebody can trip, and you have to go to the hospital, the person gets an injury, or he has to go to hospital, or maybe in the kitchen, there was a minor fire incident or whatever, those are perils. So it's important that as individuals and as corporate organizations, you're able to identify those perils, talk to your insurance company, and then they are able to advise on the best insurance cover for you. And then talking about hazard, hazard is a condition that increases the chance, that is the frequency or severity of a loss. And this is very important to an insurance company. It's always very important to analyze this, and as well to the individuals and corporate organizations. You realize that as a corporate body, there are certain ventures that could impact significantly on your operations. And so, as a prudent businessman, as a prudent entrepreneur, you cannot afford not to take steps to ensure that that kind of risk is covered promptly. So quickly, we will talk about the types of insurance. And basically, we have two major classes. We have the non-life and the life, which is also classified within the pensions, annuity, and of course, we have the health insurance. So talking about the two basic classes, let's quickly look at, let me see, yeah. So let's quickly look at the basic non-life types of insurance policies here. I decided to use picture here so that we can actually have a graphical picture of what we are discussing. The first one is the motto, which interestingly is a compulsory insurance here in Nigeria and in so many countries all over the world. And it is made compulsory by law. Minimally, you are supposed to have a minimum of third-party insurance to protect against liability that you could incur where you hit somebody's vehicle or you damage somebody's property, like fence, a pole on the road and whatever. You have the opportunity to approach your insurance company to get compensation, But basically, motto is it's quite important. Motor insurance is quite important, talking about personal insurance is quite important. And then as well as it is also very important to corporate bodies by virtue of the fact that it's one of the insurance that enables you to meet up with the legal compliance, in the country. So it covers the accidental damage to your vehicle. It also provides for fire and burglary. If your vehicle is stolen, it covers it, any form of accidental damage to your own vehicle and to the third party's vehicle. Of course, there are different types of motor insurance. There is comprehensive, which is the widest cover. It's important to take note of that. There is fire theft, which limits the cover basically to losses or damage as a result of fire or theft. And there is third party. Of course, I know that some companies have come up with different types of levels of motor insurance, depending on what a client can afford. And I believe Coronation is also in this part. So if you need your motor insurance, you can easily approach Coronation to advise you on the best based on your budget. And then we have the fire insurance, which is also very important to individuals and corporate organizations. It covers against fire, explosion, lightning damage, and other perils such as floods, subsidence, bushfire, and other ancillary perils. This is very, very key, and it's quite cheap. It's very affordable. This is an insurance that is recommended for every individual, and I know that corporate organizations don't joke with this particular class, and we see some of them taking industrial or risk because they are companies that are involved in manufacturing, production. So they are involved in complex operations. And as an entrepreneur who has invested several billions of naira in such operations, I mean, they cannot afford not to take up insurance. Like I told you earlier on, we are presently managing a significant claims that that was caused as a result of fire. You can imagine a total warehouse or a factory being burnt down. I mean, it's very important that that is embraced. And then we have the personal accident. Anybody is susceptible to injury. Can happen if you have your personal accident injury, personal accident insurance. It gives you compensation against the medical expenses that you might incur in treating yourself. It also covers death. It covers permanent disability depending on your arrangement with your insurance company. So there's a whole lot of insurance cover that can really, really support all of us as individuals and as corporate organizations to ensure that, look, what we did not plan for, all those unexpected events that could result into having to look for money on an emergency basis. I mean, insurance helps to take this off your hand. And then we have the agricultural insurance, providing insurance against crops, against damages to crops, fire, crops, flood, and all those stuff, and this is really, really key for us now in our country, and indeed in the continent. We have farmers taking up insurance to protect their crops. And I know, recently we've been seeing some requests from farmers asking for cover against banditry. This is being looked at, but basically what I'm here to explain is that there is an agreed insurance that can support your venture into this industry, to enable stability in your business. And we have the goods in transit that cover damages or loss to goods while being transported from one place to another, and there are different classes of goods in transit cover, depending on what fits into your operations. Your insurance company can always advise on the suitability. So for this, in details, it is always good that we consult our insurer. In this case, Coronation is there to give you the best advice on the most suitable cover that will fit into your business. And then we have the marine insurance. Marine insurance cover provides cover against maritime perils. losses of goods while in transit on sea, losses or damage to vessel itself, that is marine hull. Marine insurance is classified basically into different classes. We have a marine cargo, there is marine hull, and there is liability. So each of them covers their clients against fortuitous loss, particularly the marine cargo. We have the clause A, there is clause B, and clause C. Clause A is the widest, while clause C is of limited cover. And like I said, depending on your budget, the insurance has been so designed in a way that it can always fit into your budget to ensure that, yes, you are able to get the maximum cover at a very, very reasonable cost. And of course, there is marine hull for maritime practitioners. And indeed, this has been very, very, this has experienced considerable growth in the market, considering the cabotage law that was established some years back. And the insurance industry has been able to stand up to support this industry by providing different types of cover, to ensure that, the businesses of maritime is well secured. And, it has also established some level of very good partnership between insurers in the market and maritime practitioners. So marine insurance is very, very vital. And we all know the vital role marine plays in the commerce. It's very, very significant. And then for this slide, I try to focus more on the corporate insurance. The earlier slide focused on both the personal and the corporate insurances that might be very, very important to individuals and corporate bodies. But this particular one is focusing more on the corporate bodies. We have the workmen's compensation insurance that provides for cover on the workmen. We have so many industries that has employed hundreds and thousands of employees, and it's just important, and it's very key and important that those employees are covered, against death or injury in the course of their employment. And beyond that, it is also a legal requirement, in Nigeria. So as businessmen, as entrepreneurs, it's important you take up this workmen's compensation that provides against death, against injury, medical expenses, but the caveat is that it must be in the course of employment. But of course, it can be extended, so depending on your discussion with your insurer, Coronation in these instances. So, and you can see that, an employee or an employer that has provided this, it's a sort of an incentive to employees, knowing for an employee, knowing fully that, look, if anything happens to him or her in the course of his employment, I mean, his family will be well taken care of. If it's an injury, if it was an accident that led to permanent disability, it will be well taken care of. So these are also very encouraging, and it helps business to grow. It also ensures that, or leads to staff being loyal, knowing fully that, yes, if anything happens, they are well to go. And then we have the professional indemnity insurance, which is for the professionals in the various field of endeavors, the lawyers, the accountants, the insurance brokers, the underwriters and all those stuff. But this is just to provide indemnity to the client in the case of professional negligence, where an advice has been given to a client and the advice turned out to, didn't turn out the way it should be. There was a level of negligence, in it. This professional indemnity can help come to your aid and provide that compensation if an award of damages has been given to the client. And of course, we have the director and officers liability insurance, which protects the board of directors, for any decision taken, which could be taken against them in future, legally. So the insurance has come up with various levels and various types of insurance cover to support business and individuals. There's also the fidelity guarantee insurance, to protect the business venture in case of dishonesty of an employee. We're in a volatile environment, and entrepreneurs employs all sort of people, bring in, to the organizations. Different people joins organizations, but then this has to do with attitude and character, and people's attitude can change. It can change with time, but basically, what this insurance tends to cover is to ensure that in the case of any form of dishonesty from the employee, then your insurer will come to your aid and be able to minimize whatever that has been lost, in terms of fraud, or the cash, entrusted to an employee taken away fraudulently, or whatever. Your insurer will come to your aid and support you rather than losing out or having to go and look for such, fund from either your bank or whatever. And then we have the liability insurance, which speaks for itself. We as a corporate organizations, even as individuals, we owe duty of care to who is supposed to be our neighbor, visitors to your premises, either in a corporate environment or at home. You hold them responsibility to ensure that they are safe in your premises. And if anything happens to them, and they suffered any form of injury or whatever, they could take you to court as the owner or occupier of the premises. And so the liability insurance, has been designed to come to your aid, for whatever damages, for whatever court award that has been prescribed by the court. The liability insurance will come to your aid. So for details of this, you could approach Coronation for further advice. Then I would like to talk about the cybercrime. I did mention that in the 90s, in the 80s, there was nothing like cybercrime. But what do we have these days? We have a lot of technology. We have a lot of apps that has been designed and invented, which were meant to enable and support our living standard. But what do we see? It has also come with its own challenges. You can imagine a business being held to ransom because there is part of the cover is a ransomware. The cybercrime provides cover against loss of data or against an organization's data being hacked, or being compromised, because there are costs to redeeming that. There are regulatory costs that has to be incurred because you also need to inform your various customer about that incident. There can be cyber attack in form of ransomware or in form of demand and of whatever. And then it is required that as a corporate organization, when you experience such cyber attack, you are expected to take certain steps. One of the first steps is to ensure that you reach out to all the clients and inform them that the data has been compromised. You also need to take other steps as well, which is going to can be very, very expensive. Sometimes a hacker could hold a company to ransom. You can imagine a hacker that happened about years back. I think about 5 years back, there was a hacker in one of the Asian countries that held a bank to ransom in South Africa. And they had to pay, they had to pay the ransom before they could release their computer to enable them access and attend to their customer. So it comes with these big challenges. Technology is here and it has come with very, very huge challenges. And so as underwriters, and as entrepreneurs, it's important that we are wary of this. We need to be aware of it, and we need to take steps to protect our customers' data, because any customers' data lost, which became compromised, can lead to serious legal action against such companies. At least when you look at the Data Act, in various countries now, security of data is being taken seriously now. And as a corporate organizations, you cannot afford to go against what the law has prescribed, particularly concerning the safekeeping of customers' data. So let's talk quickly about life. We have the term assurance or term insurance, which is for a period of time, and it provides cover against death and maybe personal disability, permanent disability, depending on what has been agreed with your insurance company. It's just for a period of time. We also have the group life. Group life is very, very important to corporate bodies, and now it is even a legal requirement. There's a law in Nigeria that says if you employ 5 employees, if you have 5 employees and above, it is compulsory that group life assurance must be obtained, for the benefit of those employees. And it's also a way of maintaining staff. It's also a way of making staff to be loyal, like just the workmen's compensation after if they are aware that such additional benefits have been provided for them, and if anything happens to them, their family will be taken care of. Group life provides cover against death, howsoever cost, whether natural death or accidental or whatever, it provides cover. And it's a very, very important insurance, particularly for entrepreneurs. It can be very, very useful in sustaining. And you can imagine if, as an organization, as an entrepreneur, a member of staff dies and the company had to go and dip their hands into the funds that was meant for the operations just to support the family. That could affect the business. It could be significant. If the person happens to be a key member of staff, because as a corporate organization, you want to be seen to be showing empathy towards the family. And, group life assurance is one of the ways through which you can really, really show that, to the dependents of your employee. And we can talk about the other types of insurance, which is the whole life insurance, which is based on your preference. It covers the family heads, or maybe the husband and the wife, depending on what you want to arrange. But basically, it provides cover for the whole of the period while the person is still alive. And it's a very good insurance policy that you can take up to make provision for your dependents. It's something that we need to embrace very well. Endowment policy is another form of life insurance. This is like a 3-in-1 policy. It's a combination of life assurance. It's a combination of savings, and it's also an investment policy, because it provides some levels of returns, at the end of the period. It's for a period of time, a bit longer than the term assurance, which enables your savings to grow. It grows with returns at the end of the day, and it's also at the same time a life assurance policy, meaning that even if the person survives the period of the insurance, at the end of it, you not only get your savings back, you get it back with investment returns, which is quite impressive. And then finally, we can look at annuity insurance. I mean, as someone that has been working for a period of time, it's important that we make provision for our retirement. One day, everybody will retire, whether you own your business or whether you are working for somebody. You will definitely retire, And so how do you maintain your lifestyle? How do you live after the retirement? Expenses will still be there. I mean, you want to maintain your lifestyle, you need medical attention and all those stuff. So it's important that as a young person, as an individual, as an entrepreneur, as a business owner, it's important to consider annuity insurance plan, which takes care of your old age. It provides regular income, at intervals, regularly, based on your arrangement with your insurance company. I mean, for all these policies, you can always get in touch with Coronation for detailed explanation. And I believe a specific policy can be designed for you to meet your personal needs. Now, let's talk about roles of insurance in safeguarding financial stability. I know I've been making mention of that, in the course of my various presentation. First and foremost, insurance is a risk mitigation platform. Insurance cover is an effective risk management tool. I did mention this in my opening remarks. It helps both individuals and businesses to mitigate those potential financial burden that could befall them as a result of unexpected or fortuitous events, such as fire, whether it's an accident, injury. Somebody could even sustain injury at home and become permanently disabled. I mean, we have seen somebody fell down in his home and died. I mean, unexpectedly. So these are events that, as individuals, as corporate bodies, we need to analyze and make provision for. Insurance provides protection of assets. You see, all of us, we have acquired valuable assets. We bought houses, we have properties here and there, we have assets here and there, you have cars, personal belongings, furniture, settees. These are valuable assets that, look, as a prudent person, we cannot leave them lying down. We cannot just leave them unprotected. Insurance provides compensation in the event of damage to any of these property, provided they are insured. So that's the reason why, this presentation is very important. This webinar is very, very key. It provides compensation in the event of damage or loss to any of your insured property. Fire can happen. I saw a video yesterday where a building was burning at either Mile 2 or thereabout, and that fire touched the building next to it. Like we used to say, you can be very careful. Somebody could be careless. It could happen, somewhere else and, extend to your property. So insurance will help in the recovery of the cost of repair or replacement of such properties.
I'm so sorry to jump in.
Yes.
Mr. Daudu, but we are really running behind schedule. If you can help us, please begin to round things up.
All right. Yeah, I'll
much.
round up. Thank you very much. So it's also provided comfort and peace of mind. The the money that you probably, or the fund that you probably be looking for, on an emergency basis, insurance will come to your aid quickly, and then you can sort out and be able to manage that need immediately. And like I mentioned earlier on, it also helps in the legal compliance. There are some situations that the law provides that you are supposed to have insurance for. So insurance is coming in handy to support. Then talking about financial security and planning. Insurance is one of the efficient tools for a comprehensive financial planning. You take up life insurance, you take up health insurance or disability insurance, it helps, So when such situation comes, you don't need to start looking for funds. You don't need to start harassing friends. We don't need to start asking people to support. The kind of environment we have. We're in Africa where people want to support each other, or where people feel that, my brother should support me, my cousin should support me, my dad should support me. No, with your insurance will support you and grant you that financial stability. And retirement, I did mention that earlier on. Insurance offers great opportunity, great features that can secure you and your loved ones and offer you a steady flow of income in the non-working years. So as individuals, even as corporate bodies or as an entrepreneur, it's important we take up and consider having insurance. And so in the course of doing this, what should be the expectation? It should be a win-win thing. You should go to an insurance company or take up an insurance that gives you value. It's not just for the sake of having insurance. The insurance must give you value. There must be value for that cover. And then how affordable is it? Do you have budget provision for it? As entrepreneur, you should always budget for your insurance cover. It's very, very key. Then what kind of after-sales service or advice do you get from your underwriter? It's important you consider that your insurer or a broker, if that is the case, should provide this after-sales service. They should explain to you the do's and don'ts of your insurance policy, because like I said earlier on, it's a legal agreement. And then what is the claims recovery process? Is it seamless? Is it something you have to struggle and struggle before you get your claim recovery? That is also very important. So it's on and on, it should be a win-win thing. And so in conclusion, I want to say insurance plays an important role in ensuring financial stability for individuals, for businesses and organizations. It is a crucial risk management tool for securing financial stability because it provides protection in the case of the unexpected. It is also an investment in insurance cover, protect individuals and businesses from financial hardship and achieve a greater peace of mind. That one is very important. As an entrepreneur, when you have transferred your risks to the insurance company, it gives you a lot of peace of mind. You can focus on other things. You can divert, you can invest your fund in other ventures that will bring more prosperity to the business. Thank you very much.
Thank you very much, Mr. Daudu, for that very, very comprehensive review of how we can incorporate insurance in dealing with times of financial instability. Really appreciate the detail that you provided there. And now we are going to move on to a panel conversation where Mr. Daudu will be joining other panelists to dive deeper into today's subject matter. And I'd like to very briefly introduce our panelists who will be joining Mr. Daudu for this engagement. And before I do that, I want to reiterate that we want to encourage all our participants to please share your questions or comments in the Q&A field, and we'll be taking them later on as we proceed with this panel conversation. So without further ado, I'd like to now welcome to join Mr. Daudu for this panel conversation, the head of corporate underwriting at Coronation Insurance, Augustine Onkwogbe. Augustine, thank you so much for joining us. And just to say a few things about him, he has a very rich tapestry of skills in underwriting and management of insurance, and he has well over a He has been instrumental in supervising underwriting teams and managing client relationships at various organizations, including Consolidated Hallmark Insurance and Fin Insurance Company, of course, ensuring to the highest industry standards and regulation. He has demonstrated his technical acumen in underwriting strategies and market analysis, and we look forward to hearing his insights on today's conversation. Thank you so much, Augustine, for joining us.
Thank you, Wally. Good afternoon. I really appreciate the privilege, and thank you so much for having me on this call.
Thank you very much. Joining Augustine is Mr. Christopher Onwomanam. He is the Managing Director and CEO of Orient International Loss Adjusters Limited. He's an insurance luminary, and he brings his legal background to the fore as we discuss the insurance issues today. In the insurance realm, he is a fellow and associate member of the Chartered Insurance Institute of Nigeria, and he has played leadership roles at Zenith General Insurance, Elmac Assurance, and Crusader Insurance, honing his skills in claim processing, risk assessment, and regulatory compliance. It's a pleasure to have you, Chris, join us for this.
Good afternoon, Wale. Good afternoon, everybody.
And last but certainly not least, we have Mr. Oluwarotimi Adewale, Managing Director and CEO of Samvic Insurance Brokers. Thank you so much for joining us. And just to say a few words about him, obviously he has a very rich academic and professional background relating to insurance. And he specialized in training in risk management, insurance contract law, finance, and reinsurance, and has been integral. This has played a very important role in his various leadership roles in the industry. And he has been the Managing Director and CEO of Samvic Insurance Brokers since 2011. And of course, he has a very rich history in the industry. It's a pleasure to have you join us for this conversation, Rotimi.
Thank you, Wale, and good afternoon to everyone. It's nice being here.
All right, I'd like to jump right into it now as I come back to Mr. Daudu to perhaps highlight a few more points. Thank you again for the very rich presentation. And we would like you to elaborate maybe a little more on the significance of insurance in maintaining financial stability. You've clearly, in that slide where you pointed out the various ways it can contribute to financial stability, made the case. But if you can make this a little more practical, especially from your recent experience, given the engagement you've had with businesses and individuals at this time, what can you tell us?
Okay, thank you very much, Wale. Yeah, that is a very, very good and important question. You see, sometimes when I reflect, I try to imagine that if we do not have insurance, in this world, how would we have been living our lives? How would have corporate bodies be able to survive, particularly at this time that is a very, very important and very crucial and difficult time. You see, insurance is a mobilizer of funds. It's a mobilizer of funds, especially on the life side. Insurance mobilizes funds from the excess, can mobilize funds from the excess sector to the shortfall. I mean, to where there's a shortfall. Insurance provides investable funds. I mean, if you look at the investment profile of so many of these insurance companies, you see the level of funds that has been pumped into the economy. And then talking about wealth protection, talking about assets protection, insurance has been very, very instrumental in ensuring continuity in business operations. I would like to emphasize that. Take, for example, a claim of about 10 billion. I mean, there was a conglomerate that had a claim of about 10 billion some 3 years back. And you can imagine if such company had to go and look for funds to repair or replace or restate those properties or assets that has been damaged by fire. I mean, it's going to be at a very, very huge cost. And that could also lead to loss of employment. I mean, hello?
No, go ahead, sir. Please go ahead.
Okay. And that could lead to a loss of employment. So in terms of business continuity, insurance has played significant role. And for me,
sorry to jump in, sir. I was really, and what you're saying obviously is all on point, but I was hopeful that you will speak to something perhaps more recent that people can identify with. As we know, inflation has become a major issue recently. I imagine that has presented major financial challenges to businesses and individuals. And of course, we know there are several other issues relating to the macro situation in terms of a slowdown in economic activity. So I was really hoping that you can maybe speak to one or two experiences that you are aware of that you can speak to that are quite recent.
Okay, thank you. Well,
very briefly, if you can.
Yeah, that is very, very important. Like I mentioned, this period that we are in is not an interesting period at all, with an increasing inflation every day. The properties you put, excuse me, the assets you have purchased today, you want to purchase it next week is not the same price again. Cost of vehicles has skyrocketed significantly compared to last year. I mean, even looking at the exchange rate issue now, so all put together, you want to protect your assets. You want to ensure that you don't have you wouldn't have to start thinking of what happens to your assets in the event of fire, or whether it is stolen or whatever. So as an individual or as a corporate organization, you need to be very, very strategic in ensuring the safety of those assets, because the loss or damage to it could have significant impact on your finance. Because I mean, if anything happens, you have to find a way to replace it or repair it, and the costs will be very, very significant. Like I told you, some of the claims we get to see these days, those claims, some of them ordinarily would have been maybe in the region, would have been like 1/4 of the cost. But because of inflation that we are going through now, they have gone up significantly. So the effect is that if an organization or an individual has not put in place an insurance cover to protect these potentials or these exposures, is going to have significant impact on their financials. It's going to impact negatively on their financials, and they probably have to fund to finance it. Thank you.
So, and very briefly, if I can just come back to that point, just to clarify the principle that is at play here. So are you suggesting that in a case where somebody either loses or loses some kind of property, or it's severely damaged, the principle is to bring them back to the state that they were in prior to that damage, regardless of the cost? In other words, the insurance is bearing the cost of that of that action. Is that what you're essentially saying?
Absolutely. You have put it in a very, very apt in context, because that is what insurance meant to serve. Perhaps because of time, I could have included in my design the principles of insurance, but that would take a lot of time. So the basic thing is that your insurance is meant to put you in the position you were immediately
prior to the loss.
And you can imagine how positive impact that will be on your financials.
Absolutely.
I mean, meaning that you don't have to go and start looking for funds anywhere. Your insurance comes to your head. They replace your car, or they repair your car. And I mean,
Understood.
People will be wondering what happened. You had such a significant damage to your vehicle, and within a short period of time, you were able to repair it without any hassles, without even have to chase friends to support you without this. So insurance plays critical role in ensuring that all those unexpected events is taken off you, and you don't have to bear any financial burden, because of the occurrence of such loss or damage.
Understood. Thank you very much for that. Let me go over now to Chris. Chris, you are you're a loss adjuster. So help us appreciate how loss adjusters contribute to ensuring financial stability for policyholders. Just walk us through the dynamics of claims and the role of loss adjusters.
Thank you, Wale. Actually, speaking from thank you, everyone. Speaking from the standpoint of loss adjusting, when a policyholder takes out cover from an insurance company, and then there's a loss occurring to his assets or the company's assets, and to also ensure a gender impartiality, becomes imperative to bring in an external loss adjuster to look at the loss, quantify it, assess it, investigate the circumstances leading to such loss or losses. And again, because the impartiality for a policyholder, if you have to send in, perhaps in most times, the underwriting staff, it could be like, okay, maybe the insurance companies don't want to pay claim, that's why they're bringing in their staff. And then every step the staff takes or the insurance company takes, which is recommended by their staff, it will look like the insurance company is trying to check responsibility. But when you have an external loss adjuster, you will sit down and discuss with the insured. This is the scope of cover of your policy. These are the exclusions. These are the perils. These are the covers. So this is the limit of liability insurance companies can pay you. In most times, it's truly difficult to have 100% reinstatement because, of course, there could be policy excess, except it is sometimes it's bought back. So it brings in confidence in the minds of insuring public that, okay, there's an external mediator now coming to interpret. Because, like Inga said, the insurance contract is a legal document, it's a contract. So at that point in time, what is embodied, it is not a time to go argue. There's a contract before the loss adjuster, is to interpret it vis-a-vis your policy you have taken. So when you see a loss adjuster and then they're discussing with you, telling you, okay, and again, beyond assessment, quantification, adjustment, or stating the liability, it's also important to let the insured know, okay, if there are covers that are not applicable or there are perils that are not covered, but next time, maybe in your renewal, you can ask for this cover, because it's also building confidence so that the insured will not go away thinking that insurance companies are, come again, they're fraudulent.
Taking advantage of them.
They're taking advantage because in most times, except they're coming through brokers, they may not be truly aware of the nice intricacies of insurance contract. So when you advise them, you're also helping to promote the image of the insurance industry. So, okay, next time, I can ask for this. Yes, a little bit of a premium, you ask for this. This scenario would have been covered if you have taken this, if you have done this. So all of this add up because you are also, not just that you are a loss adjuster, you are an integral part of the insurance industry. You are also promoting the beauty, the imperativeness of the insurance policies being taken out by policyholders. So when you are talking with insureds or the insurance public, you are building confidence in them, you are advising them, and then beyond the quantification assessment, you're also giving risk mitigation measures, risk prevention measures. For example, a fire has happened and there is no fire extinguishers you can clean handy for you, you can use to begin to fight the fire before you begin to call the fire service personnel. These things are important, particularly for corporate bodies and for everybody. So you let them know if you have this, you could have stopped to some extent, you would have mitigated against the fire. You may not stop it entirely, but you would have reduced the severity of the loss.
Yes.
So these are the things that loss adjuster is an all-encompassing thing. It's not just to go there, investigate, adjust the claim. You also have a duty to interface with the insured and advise them, oh, next time this, next time this. So that the policy they have will be robust enough for them because they're going to pay the premium for such additional covers.
Thank you very much for the insights there. Very valuable indeed. So I believe that our participants today are better appreciating the role of loss adjusters in the whole dynamics of the insurance industry. Let's now speak to another group of people, which is the insurance brokers. And I'd like to bring in Mr. Rotimi Adewale to chime in at this point. Can you also speak to perhaps the challenges that you are seeing right now as an insurance broker and how your firm is addressing these challenges with respect to ensuring financial stability for people who actually purchase insurance policies?
Thank you very much, Wale. And let me say a big thank you to Yinka for the keynote address. For our own role at this critical time, the major challenge we see is purely on the insurance. The cost of claims has gone so high and it keeps increasing every day. So, for instance, if someone has insured a vehicle at 2 million naira last year, and with the current inflation, that same vehicle must have been up by over 100% now to almost 5 million. So if you're talking about insurance being a vehicle to financial stability, the moment that claims happen and the sum insured is still on 2 million, the client cannot be brought back to the condition it used to be because inflation has crippled the investments. And this especially because of also of the economic situation as of today. Insurance becomes a secondary option or a secondary priority to a lot of clients. How to survive, how to pay school fees is the current major challenge for them. And if that incident happens and the vehicle is underinsured, which automatically means that the clients have to dip hand into research, into investment for either project, for either school fees. So what we try to do at every point in time is we continue to review our client's portfolio. We continue to review for them to be able to insure based on the cost of the current cost of risk exposure. With this, yes, they will pay additional premium, but this also guarantees stability for their financial base. And because what we mean by financial stability is purely a healthy financial base, which every time is exposed to one risk or another. So for them to be able to sustain this, they have to have a shock. And that shock is insuring on the current market basis. And that is always the only way out in terms of risk management for our clients. And that's what we do.
Thank you very much. And I think you are speaking to something which is very important to point out, because we were speaking to the principles of insurance earlier, and one of them is to try and restore the insured to the position they were before a loss or event. And you are clearly pointing out that for that to actually happen, then the insured must also be willing to adjust the premium that they are paying for that cover. So it's very important that we point that out so that people are clear on that. Thank you for that. We have so many very interesting questions coming up in the chat field, and I would like to get to them very briefly. But before I do that, I want to perhaps go to Augustine to perhaps give us, at a very high level, I want you to speak to the strategies that you're employing at Coronation to safeguard the living standards of individuals through insurance. I imagine that will manifest in the product offerings, but clearly this is a season where financial stability is a big issue. How is insurance playing a role from your perspective?
All right, thank you, Wale, for having me. At Coronation, what we do is we create awareness, educate people on different types of insurance to take at this particular period of time to ensure that they are adequately covered against unforeseen circumstances that we do not wish to occur. We also have a variety of products that we designed to meet the crucial needs of our customers at this particular point. And so we provide the advisory role, advising them the best type of cover to take, the best and adequate type of insurance to take to safeguard their property against losses. We also provide them, we give them one of the best prices, affordable prices in terms of rating and the rest. And we'll create a lot of awareness. We have a lot of materials to educate people the need to have their property adequately covered at this particular time. Because the essence of insurance, just as you rightly made, is to ensure that we will put the insured at the position where they are before the loss occur. Another thing again we do is also advise them in revaluing their property. Some people, because of the economic challenges within the country, they keep on underinsuring, just as Rotimi mentioned. And so we educate them the disadvantages of underinsurance. Because in the process of underinsuring, you are indirectly affecting yourself. A vehicle that is valued 2 million naira, just as you mentioned, last year can never be bought at 2 million naira today. And so, in essence, you are not putting the person to the position he was before the loss occurred. Because when you get the 2 million, you cannot afford that vehicle. But when you revalue the value of the vehicle, at the point of renewal, you get full value of your insurance. And so these are
But
the
what
things
about in between, if I may ask? Is there an opportunity to do that?
You can revalue in between. All you have to do is to pay the difference in premium. We call it additional premium. Right. And so it will terminate within the same period. And these are the measures we put in place to ensure that our customers are adequately safeguarded against losses in this economic hardship. Thank you.
Thank you for that. And still staying with you, though, there's a question here because I want to go to the Q&A field. And again, I want to encourage all our participants to share their questions and comments. There is a question here asking, in the event of catastrophic loss or claims, how does insurance guarantee financial stability? And I think you're already speaking to how people can prepare themselves for that. It's all part of that process of revaluation. And if that happens in a timely manner, then if peradventure there is a catastrophic loss or claim, then the insured will be in a good place. But can you just speak to that? Can you just share a little more in answering the question?
Every insurance have a proper insurance arrangement, and that is where Mr. Nyikan and the rest, African comes in place. At Coronation, we have a solid and strong reinsurance arrangement that protects our portfolio against catastrophic losses that are huge. And so when a loss of this magnitude occurs, what we do is to ensure that the proper thing is done. And that is the need to get the loss adjusters who are also experts, different individuals who are not are seen to be impartial in their judgment. And so when we appoint the loss adjuster, they take a look at the claims, adjust it, and the claim will be adequately settled. But like I mentioned, there is every need at this particular time, going by the economic condition of this country, to ensure that every property is adequately insured. And I will give you a practical example. The cost of cement currently is not as it is, or as it was as at last year. Last year, a bag of cement is sold at the rate of 4,000 naira or thereabout. As we are talking today, is over 10,000 naira. And so the cost of rebuilding a property that is damaged by fire, it has gone up far, far higher than as it was as at last year. So we always emphasize on revaluing your property. And when this is occurred, Coronation is always one of the strongest, one of the strongest company within the industry, and we settle our claims without any issue. We're always there at the point where our clients are needed, because we also have a strong reinsurance arrangement with our core and our lead reinsurers. Thank you.
Thank you. Thank you very much. If I can go back to Mr. Daudu, and let's get a little practical here. And given the pressures that the current economic climate is presenting to insured people, the big question is, how do you prioritize your spending? Now, taking a policy is effectively some expense. And as has been pointed out, given the changing economic dynamics, if people do not adjust their policy payments, then they may not be getting the kind of cover and financial stability that they should in the event of an unfortunate event. So what will be your message to those who are finding difficult to prioritize their spend on insurance? Can you just, in a practical way, speak to that point?
Okay, thank you very much, Wale. I think I will also use myself, as an experience. Over the years, I've been insuring my building, my personal assets, and all of a sudden, I just realized that, look, I've been maintaining a particular sum insured for years. And with the level of the rate of inflation these days, I said, look, I have to revalue. And I tried to make an inquiry, in my vicinity, and I realized that my property, which I bought at a certain amount, is more than double of what I bought it about 5-6 years ago. And so immediately I had to adjust the sum insured. And that also reflected on my premium. But for me, as a prudent person and as an underwriter, I had to make immediate provision for it because I consider the importance of that insurance cover. So as an individual, we need to prioritize this situation. We need to prioritize and make budget for our insurance premium. It's very, very important. The worst thing that could happen is you can always discuss with your insurance that, look, I may not be able to afford the payment of the premium in full, but I can pay twice, which I did with my insurance company. So it's very, very key, particularly at this time that things are very expensive. Inflation has eaten deep into the values of assets. We can't afford not to revalue our assets, which other speaker had emphasized earlier on. So we need to take that. It's important that we consider and ensure that we make provision for it. It might be very tight, might be very difficult, but then it's something we need to set aside for it, which will make it as part of our plan on a regular basis. I mean, all of us, we do social outings, we get involved in other things on a regular basis. As we make provision for all those activities, let us also prioritize our insurance premium. I mean, protection of our asset is very sacrosanct. Thank you very much.
Thank you very much. It's all a matter of prioritizing, and when there's a will, there's a way. Thank you very much for that. We have another question here, and I'll open it up to the panel and welcome anyone to speak to this. What has been the role of insurance so far in mitigating agricultural products and climate risks in Nigeria? How open is the Nigerian insurance and reinsurance industry to taking up such risk? I wonder if anyone would like to speak to this.
Okay, I can speak to that.
Let me say one thing. Okay.
Okay, you want to go ahead?
Can I go on, Yinka?
Sorry?
I said, can I go on, or you are speaking?
Okay, go ahead. Go ahead. I can make contribution later.
The Nigerian insurance industry have taken the challenge of agricultural insurance. Within the Nigerian insurance market, we have various products that speak to the needs of these agricultural challenges. We have insurance for crops, we have insurance for livestock, we have various insurance. And at Coronation, we're also working towards getting approval for agricultural insurance. As it is for now, we do not offer agricultural insurance, but the market is strong enough to take the challenges, especially when it comes to agricultural products. So one of the reasons why we are doing this also is to encourage food security and other agricultural need of the nation. Thank you.
All right, thank you, sir. Mr. Daudu, if you can also add your 2 cents very quickly.
All right, I will also speak from the perspective of a reinsurer because we deal with a lot of stakeholders in the market, whether direct farmers, whether insurance companies, and I tell you that even the federal government of Nigeria has shown a lot of seriousness about supporting agric, and we know we've been having issues on the food security in the country, not only in Nigeria, I mean in the West Africa region, but because of the support and because of the seriousness to which this government is putting towards agric, even in the previous administration, I know that government have sponsored the insurance cover for some farmers, just to encourage them because it's a very, very crucial and important sector. So different covers has been made available there in the market. We have the weather climate index product. There is multi-peril. There is livestock and crops like Emmanuel mentioned, Nikebe mentioned earlier on. But by and large, I think the market is now investing more in agric insurance, and government is willing to support agric insurance because that is the way forward for us. Nations that wants to ensure food security, we need to invest a lot there to support. And even for us as a reinsurer, Africa Re, we've been providing a lot of reinsurance cover to these companies because there is a need for capacity building in terms of financial capacity and knowledge capacity. That is very important. And right. Indeed, it's also good that the industry also find a way to support the farmer by engaging them constantly, advising the farmers on risk mitigation, advise them on risk management. How do you manage it, your risk? How do you ensure that your crop are taken care of and all those stuff to mitigate whatever exposure? But it's a very important sector, and I believe it's a sector that is growing. More companies are going into it. So there is an insurance cover for that class, for who that are requested for that question. So it's a very good thing. Thank you.
Thank you very much for that. I'd like to go to Chris now, and still staying on that point about risk mitigation, because Chris, you did mention it to some extent when you were using the example of having fire extinguishers available. And while I imagine that anyone paying for a policy will like the insurance company to in quote, bail them out in the case of an event, but I think perhaps it would be useful to also speak briefly to risk mitigation that reduces the potential of loss and how important that is in the mindset of somebody being insured.
Okay, thank you, Wole. It is important. We from the loss adjusting perspective, like I mentioned before. When adjusting claims, some policyholders don't really know there's a physical hazard, there's moral hazard. For example, somebody has a building, and around the building there are overgrown weeds and grasses. We have handled a lot of some claims that the risk crystallized solely because of what they call bush farming. When you have grasses, you have bushes around a particular building, and the policyholder was not mindful of cutting this or preventing it, and somebody is doing bush farming, and the fire will creep in from that place and consume a building that is standing on its own because the grasses are linked into the compound. So constant education is important to let them know you can take these steps to mitigate the loss. It's not just for you to crystallize. It's not because you are paid a premium, but it's also important because within the period the loss occurs, the insurance company may not pay you anything until the cost is the claim is quantified, assessed, and before a recommendation can be made. So within that period, what will you be doing if you're not a manufacturing concern, you don't have a conspiratorial loss policy? So if as an individual, where will you be? So the concept of risk mitigation is, well, you have people who don't have, you have houses, you don't have fire extinguishers, or you store, sometimes you will have the issue of fuel scarcity. You store fuel in your house because you want to ensure that even if there's a scarcity, you have all those things you're bringing into the compound are inflammable substances. And if any fire happens, they will inflame the place and they will worsen. So it's incumbent on us to be, please don't put this, no matter how desirous it is, don't do X, Y, Z. Now you have a building, for example, you provide a window, you don't have burglary proof. And sometimes burglars can pass through there. If you don't have a protection from the window, they can pass through there, enter the house, and burgle the place. So these are physical restrictions that will help mitigate a loss that may happen. But if you put them in place, it's possible they can stop or prevent the losses from happening in the first instance. So even as underwriter, from Augustine perspective, you also need to begin to educate the policyholders, find a way to put it in the policy document. Please take these measures, add this, do this. It's not just about, it's like advisory. It's not just when a claim happens or like a clauses that can attract penalty, but you can put it there. Please put this in place, put this in place. And that's where the issue of inspection comes in. Sometimes we insure what we have not inspected. We have a lot of claims that we are dealing with, all coming from flood. Of course, if one has gone to inspect the properties, the premises, you know the topography, you know the plane. Are these places prone to flood? If they are, what can you advise the policyholders? What can we? Because it's something waiting to happen. One rain, one heavy downpour, the building is in a mess. And the insurance company, of course, is a flood. It's one of your peril. You will pay. But if you take your time to inspect, have a threshold, and then even if you can't reject the policy, but you have some advice you can give to prevent drainage facilities. So all these things, when you give the advice, they will add up, they will help in ensuring that these losses don't crystallize in the first place.
Right. Thank you very much for that. I saw your hand up, Augustine. Do you want to speak very briefly to this?
Yes, Chris has made a very valid point that I forgot to mention. One of the things we also do to mitigate against losses is pre-loss survey. As soon as a policy is incepted, we carry out a survey on that property. And during the process of carrying out survey, a recommendation is sent to our clients. Is also part of educating the insuring public that these are the things that are required, like there are a certain quantity or kg of fire extinguisher that is required to install in various strategic positions of our buildings. And there are not all types of fire extinguisher that you are required to install at a particular place. There are some for gas, there are different types. And so we do educate our clients by communicating these risk recommendations to them. And it's part of the things we are doing to ensure that our various clients are adequately safeguarded against future losses. Thank you.
Thank you for that. I'd like to go to Rotimi now to perhaps chime in on one other question that is here. And I think this again speaks to the pressure on the, if I can use the term, pocket of the insurance, of the insured. This person is asking, please, I'd like clarification on this. Is there like a maximum amount of money to be paid in order to be insured? Or we just buy a policy and keep putting money in it until the risk happens? So I think this it's very important to speak to this so that people better appreciate the whole concept of insurance. I'll leave that to you, Rotimi.
Thank you very much again, Wale. Insurance is a pool of risk where you gather various people risk and you pour in together into a basket. And if the insurance companies are lucky, there is no claim, which means there is no claim from every risk that has been put into that basket. If there is a claim, then the premium from those baskets is being used to pay for the premium. Do you pay a fixed or a certain amount of money annually? Yes, because insurance is an annual policy, especially the property part of insurance. So your risk exposure determines how much you pay as a premium. There is what we call sum insured. Sum insured is the value you're placing on your properties. And a particular rate is applied by the insurance brokers or insurance companies. That determines the premium you pay annually. If your risk did not change, the value of your risks did not change, then the following year you pay the same amount of premium. The amount you pay is called premium because it's the consideration for the risk you're transferring to the insurance company. In the event your risk changes during the current period and there is a claim and or a value revision, like Chris said, then your premium goes up. So premium is determined by the sum insured, by the value you place on your assets. So there's always a rate. It's not that you keep putting money into the policy, except you decided to negotiate with your insurance company, and like Yinka said, they agreed that you can pay twice, which means you're going to pay twice, and the same, likely a 50% each of the sides. So you're not just putting money into the insurance, you are paying a premium, which is a consideration for the risk you're transferring to the insurance companies. And this premium is determined by the value, your risk exposure. Like the loss adjuster said, there is always a need for inspection and review of a risk management part of whatever risk you are coming up with. And that's why, as an insurance broker, we try as much as possible to get a tailor-made policy for you as a client, a tailor-made policy with a very comprehensive coverage, but at a most competitive pricing. A lot of clients try to cut corners. When you try to cut corners because you're getting a lower premium from another insurance company, that doesn't mean the insurance company that are giving you a higher premium are out to cheat you. But it is important for your risk to be priced the adequate way. When it's being priced adequately, then yes, you're paying a premium, and you can be rest assured you're going to have claims paid if the risk crystallizes. Thank you.
Thank you for that. And in terms of pricing risk, and I guess this is where potentially more sophistication can come to the market, and I was wondering to what extent that is happening now. How do you, in quotes, reward and distinguish, if I can use that phrase as well, a person, for example, who is very risk conscious, he has added all the risk mitigants, and he's requesting to be insured for a particular type of risk. So for example, maybe a motor insurance, and maybe I have a wonderful driving track record, no accident in the last 7 or 8 years. And there's another person who is perhaps less risk conscious, maybe a little more reckless, maybe has an accident every other day because of the way the person maintains the vehicle and drives, and we're still paying the same risk, the same premium. Is there now an opportunity to begin to segment people for the real risk profile that they have? I was wondering if you can speak to that to me. Is that happening at all?
Yeah, thank you very much. That currently also happens when you are reviewing the underwriting factors for every policy. In the past, there was this yellow book, motor yellow book. We don't have it again. In the yellow motor book, determines the premium you pay. It puts into consideration the weight of the engine. It puts into consideration the use of the car. And as at that particular time, a woman that works in the bank drives a car to the bank and parked it and used the bank's official vehicle to do marketing. When she closes, she picks up her car and go home. So the risk is reduced. On a Saturday, she goes to the market. On a Sunday, she goes to the church with the family, and possibly not with her own car, but with the husband's car. Compared to a young man that does his business and is always on the road, and in the evening hang out with his friends. On a weekend, goes for clubbing. The rate is higher, and it tends to pay more. But in the recent time, yes, we have a flat rate. But even with a flat rate, a lot of insurance companies will put into consideration the risk exposure of the owner of the car. Yinka talked about moral hazard. Oh no, sorry. The loss adjusters talked about the moral hazard and the physical hazard. The moral hazard has to do with the individual that is insured. So if you are deeply into drugs, you're deeply into alcohol, and you're deeply into night crawling, certainly the insurance company will either raise your rate or give certain terms and conditions that makes it tougher for you. So the policy is on, and everything is being reviewed based on risk exposure. I'll give another example for fire policy.
So that is really happening now. It's not theory, it's happening.
It's happening. Insurance companies actually have underwriting factors. And sometimes insurance company turns down the risk when they see that the risk exposure is extremely huge and there is no way they can accommodate it. But will they go direct in saying they are rejecting? No. No insurance company will go direct and say they are rejecting, but rather they will make the terms and constitution more tougher, and they will raise the rate up to the extent that the client might feel, oh, if I pay this, then what is left for me? I'll give another example, fire policy. For fire policy, there are certain discounts that the insured can have. If you have fire extinguishing appliances, water sprinklers fitted to your property, there is the fire extinguishing appliances discount that you enjoy. So you're enjoying a certain discount more than someone who doesn't have risk mitigating equipment in his own properties. So insurance company actually put a lot into underwriting factors as it relates to the risk exposure, and also the claims experience of the client matters. Yes, we understand in Nigeria it's difficult to get the claim experience of a lot of clients, but we're also getting to that stage where the claim experience is so huge in the last 5 years. Then the insurance company apply the adequate rate of increasing it up, and also reviewing the risk and where they can come in to reduce the risk exposure. So by and large, yes, the client with the lowest risk is expected to enjoy a lower rate than the one with the high risk.
Thank you very much for clarifying that. Okay. We have more questions here, and somebody is saying here, this is coming, of course, he's referring to the event, this is coming right on time with respect to the rise in the cost of most assets and commodities. The concern, however, for me is getting the insured, I guess it's the insurance company, to value at present value. They do not realize this need until the claim occurs. So this, again, speaking to the impact of inflation and how that impacts the dynamics of the policy. Augustine, do you want to speak to how this is being addressed in a proactive manner as opposed to reactive in the way the person is describing here?
Well, I quite understand what the person is talking about. However, what we do is at renewal, as you are sending your renewal notice, which have to do by notifying the customer or the client that his policy, his or her policy, will be due at a particular date or time. We also incorporate a form of advice, advising the insured to revalue his assets. It's an advice. You can't force someone to revalue his assets. But the implication is when a claim occurs, you find out that you'll be penalized because your property is not adequately insured. And so we always do that when sending our renewal notice, advising the customer to revalue his asset or her asset or the company asset. But as I earlier mentioned, it is an advice which cannot be enforced until maybe a claim occur or not. Thank you.
Thank you for that. I'd like to go back to Chris now, and maybe you can speak very broadly here about best practices for maximizing the benefits of minimizing risk. Drawing from your experience, what are some of the best practices for maximizing benefits and minimizing risk through insurance? I think you have an interesting perspective as a loss adjuster.
Okay, there are a lot of ways of maximizing benefits of insurance. For a policy holder. But let me say, to start with, it may also be good, if not better, for a policyholder to try and engage with an insurance broker, a professional insurance broker that will also look at your operations, look at what you're doing, and then be able to suggest and put and design tailor-made policies, because there are times that what you do needs to be taken into cognizance, into reckoning in evolving a policy for you. If you go and take a generic policy, and because you are not enlightened, you're not insurance aware, you're not enlightened, and the loss, of course, if you've not read your policies, most people don't read it. And insurance companies are saying, look, this is not covered, this is not covered. Because you also went direct and you are not aware, because if you are informed, it's a different thing. So at that point in time, you've lost the opportunity of maximizing the benefits of insurance. You have paid your premium.
Sorry, can I take that again? You said you went direct to who?
Now,
sorry, I missed that.
Okay, if you are not insurance, you don't have insurance enlightenment, education, you have not related with insurance policies or the workings of insurance or insurance profession, and you just walk into an insurance company and say, I want a goods in transit policy. Oh, they ask you this question, that question. It might give you a generic policy. And that generic policy, because you don't have the knowledge, you may not be able to read to know whether...
What is the best way to acquire that knowledge? I guess maybe that's...
Okay, so that's why I was saying, we encourage policyholders that, they say, in doubt, ask questions. And then when you can ask questions in this regard that are neutral, are insurance brokers. If you have a consummate experienced insurance broker, you walk up to their office and say, this is my operation. This is what I'm into. This is what I'm afraid of. Because you're like, you can say you're running away from, there's a risk, there's a peril. And so what can I be covered so that in terms of if any loss happens, the premium I'm going to pay, I'll be able to have the benefits of it.
Of that, understood.
So that's where the insurance brokers come in. So if you're properly guided and then you explain your operations, when a loss occurs, you will see that you get the benefit of the premium you have paid. Like I said, two things. It does not mean you cannot go directly to an insurance company to purchase a policy, but be sure you know you are able to read the policy document, which, from my own experience, it is when a loss occurs that we are beginning to say, oh, this is covered. They say, what are you talking about? Because nobody has taken pains or taken time to read the policy document.
Understood.
But yeah, so the first way to maximize the benefit is consulting an insurance independent neutral advisor who can help you, except you are insurance aware, enlightened.
Understood.
Let us quickly, let me just say, you also need to, like Mr. Rotimi has said, you also need to know how you're using. The fact that the insurance company, you have a cover doesn't mean you go on a flow league to do what you like. So you also have a duty to act as if you're not insured. And also, those are also a way of also maximizing benefits. So there are things the insurance company will tell you to do. Stick to them. Or provide your this, do this. The moral hazard, the physical hazard. so that at the point of loss, it will not be construed against you. Because if such things happen or you do not take note of them, of course, the loss adjuster will say, this is what happened, what led to the cause or to the loss, and they will construe it.
This is the
Yes.
extent of coverage. Understood. I see Rotimi's hand up, and I think he wants to chime in on this. If you can be very brief, because we are really running out of time.
Well, I'll be very brief. Thank you, Chris, for speaking about insurance brokers. Insurance brokers are your consultant as an insuring public. Our service to you is free of charge. We are only going to earn commission from the premium you're paying to the insurance company. So whether you use us or you don't use us, you're going to pay the same premium. But when you use a professional insurance broker, it reviews your risk exposure. It negotiates the rate and the premium payable for you. It gives you a tailor-made policy. And when there is a claim, it processes your claim while you sit at the comfort of your room. We need to understand that, yes, insurance companies are how to make profits. So they will always have terms and conditions in the policy documents. Sometimes these terms and conditions don't pay. It's not yes, it's part of the normal policy conditions, but the insurance brokers help you to negotiate it down. And at every time, while they look for profit, we enjoy your goodwill when we give you a tailor-made service, and we are out to ensure you get your maximum claims. So you're not losing anything by patronizing a registered insurance broker to place your policies the best way it could and with the best insurance companies. Thank you.
Thank you very much for that. We have another question. Does relocation fee applies in the case of fire incident under household policy? I wonder if anyone can speak to that.
Please come again. I didn't get the question.
Does relocation fee, does it apply?
Your typical household insurance policy has what we call loss of rent as part of cover, but it is only added on request. On your householder policy, you have house owners policy, which cover the owner of the building, his content, and perhaps the ORI section, which is the gadget. For householder who happen to be someone that rents an apartment, you can actually take a policy to cover loss of rent as a part of an add-on to your householder policy. And you place a value. The loss of rent value will be rated adequately. The premium for the loss of rent will be charged. So in the event of fire on that property where you rented, your rent is already covered. Yes. Insurance, your insurance take care of that.
Okay. And then what about if, as I go along in the policy, I become more, should I say, aware of risk factors, and I want to add coverage?
No, insurance is that process?
Is that process?
It's not a one-way traffic.
How complicated is that?
Actually add at the middle of the contract.
Yes. Addition so very quickly it can be done.
Yes, it can be done.
Okay. Just wanted to clarify that. Okay.
Whatever value we rate for it, and you pay the difference in premium.
All right. And then if you can speak very quickly to this, because we have quite a few questions. This is a short answer, I think. How is premium paid for an insurance? Is it paid through a permanent contribution or a one-time bulk payment?
All right. For a general business, which is fire, motor, and the rest, is one of an annual premium. Once you pay for this year, it covers you for 12 months. Understood. And when the policy is due for renewal, you pay the renewal policy, depending on the terms and conditions. If there is a change in the rates, you pay higher premium. But if there's no change, you pay the same premium. It's just one-off payment. Once you make your payment, annual premium, it covers you for the whole 12 months. But however, for life business that Yinka made mention of, should I go on?
Yes, please. I'm sorry. Go ahead.
Okay, for the life business that Yinka made mention of, is also depending on the agreement. There are some life policies that you make monthly contribution if it is life. But basically for general business, it's an annual premium. Thank you.
Okay. But I want very quick one, if you can, clarification on this. Given the economic conditions that may make it difficult for people to make those
Yeah, we
bulk
allow
payments
the
at once.
instrumental payments. We
Yes, I
allow
wanted to
the
confirm that.
instrumental payments.
Okay.
But like Chris earlier made mention, every policy is by the terms and conditions. When you are making a pro rata payment, there is what we call part premium clause. The clause is saying that in the event of a claim, you are required, because the cover you enter is an annual cover, so you are required to pay the balance annual premium before the claim is entertained. You understand? Because it is an annual cover, and so you have to pay the balance while we settle the full claim. But we allowed instrumental payment because of the economic hardship of the nation. Thank you.
Thank you very much. A quick question to Africa Reinsurance. What type of cyber insurance support does Africa Re provide? You're muted, sir.
Yeah.
Very briefly, sir.
Thank you, Wale. Yes. Presently, we have the basic cyber crime insurance protection, and as you know, that we deal with insurance company. We don't provide cover directly to clients or to individuals or to corporate bodies. We deal with insurance companies, and what we do is to support an insurance company that has been approached to provide such cover. So basically the cover is against loss of data, against implementation of regulatory requirements. When data compromise happens, what does it cost to replace those data? What does it cost to inform the data subject? Because you have to inform them. It's part of the regulatory requirement. You have to inform them that your data has been compromised, and other ancillary costs will be provided for. So there's a cover for that. And we are always willing to support any insurance company that has been approached for such coverage. Thank you.
Thank you very much. As we begin to round up, because we are running out of time now, there's another question here that perhaps wants to clarify who exactly to engage in the insurance ecosystem. I'd like to insure my house. Who do I meet among all the experts between brokers, underwriters, reinsurance? So can we get a response to that?
Mr. Rotimi, you should.
Yes. Thank you, Chris. Thank you for looking out for me always. For every insuring public, like I said, the broker's service to you is free. The brokers are the professional arm of the insurance industry. We don't have any other job than to review your risk. So if you want to insure your house, all you need to look for is a registered insurance broker. And I'm emphasizing the word registered because we also need to be very careful. There are brokers that are not registered and they still operate in our environment. So all you need to do is get across to an insurance broker who will sit with you to review the value of your assets, review the risk exposure. It's not all about insurance alone that we do. We carry out pure risk management. We identify the risk that your house is exposed to. We analyze it, we evaluate it, and we come up with a treatment. The treatment for your house is for you to transfer the risk to an insurance company through an insurance broker. So with this, you get an accurate coverage for your risk exposure, and you can sleep that yes, you're well covered. So please approach a registered insurance broker for your risk. Thank you.
Thank you. Thank you very much for that. And as I round up, maybe I'll give the final word to Augustine, because clearly these are difficult times and people are trying to navigate the tough macro conditions. But at the same time, insurance is there to provide support. Perhaps you can speak very briefly to, the type of solutions and if you like products that are available right now that you think are perhaps even more relevant in the current climes.
All right. Thank you, Wale. At Coronation, Coronation Insurance PLC, we have affordable products that are cost-friendly to our insuring public. We have the householder policy that covers the owners of building against fire incident to their building. It covers their content, which is the property they own in the house. You also cover all risks, which have to do with your gadgets, your laptop, your phones, your movable items, such like jewelries. You also have an additional cover of loss of rent, like I made mention on, in case of a fire incident. You have to get a temporary apartment pending the time the building is put to order. We also have householder policy for individuals that do not own their own apartment, but they have a rented apartment. They have their content to be covered, their gadget to be covered, loss of rent. Our motor insurance is very affordable, though it is regulatory, and so the comprehensive is 5%. However, you can actually cover your motor vehicle for third-party fire and theft, which is a mini comprehensive. It covers the vehicle against fire incident, theft to the vehicle, and third-party property damage or death. That particular one is 60% of the comprehensive rate, which is 3%. We have a third party for various type of vehicles, and they are very, very affordable. Our fire policies are superb. We have a lot of other tailored-made policies. Your personal accident against accidental deaths, permanent disability, medical expenses. We also our marine is superb. So we have various type of policy. We have healthcare professional indemnity for medical doctors and healthcare practitioners. We have public liability for core professionals such as engineers, lawyers, and insurance brokers as well. We provide cover for the insurance broker because they are also experts in their own field. And so we have burglary insurance, we have employers liability cover, we have oil and gas insurance. We have insurance for every sector, every individual within the Nigerian insuring public. And most of our products can be gotten from our solutions. We have our retail portal where you can sit at comfort of your home and buy your householder insurance, your house owner insurance, your motor insurance at the comfort of your home, your personal accident. We also have Coronation mobile app where you can easily get insurance product through the help of your mobile phone. You can download that from the Google Play Store or Apple Play Store. You can also get our products by the USSD, which is *901 *25#. You can get our marine product through our marine portal, which is one of the best solutions so far within the Nigeria insurance market, where you can sit at the comfort of your home, get your marine insurance without any stress or any issue. Our claim portal also is one of the best claim portal where you can actually sit comfortably at your home and process your claim without having any form of interface with the Coronation team. And you can also get your insurance through our WhatsApp bot, which is just adding 091 5523 8888. You can get your product through WhatsApp. So we have all these solutions that you can actually access our product without any stress. Thank you very much, Wale.
Thank you very much, Augustine. I think on that note, we really have to round it up here. Thank you so much to all our panelists for their very valuable contributions. I believe that it has been valuable to our audience as well. And on that note, I'd like to now yield perhaps to Mr. Olajolo to share a few words as we begin to round things up for today. Olajolo, are you there? All right, I think we're not able to connect with him right now. Okay.
Thank you.
Good afternoon, ladies and
Olabumi,
gentlemen.
are you the one delivering the
Yes,
closing
yes,
remarks?
I
Okay,
am.
please go ahead.
Thank you. Okay, good afternoon, everyone. My name is Oluwabumi Adetiloye, Head of Corporate Sales at Coronation Insurance. As we bring this enlightening webinar to a close, I want to say thank you to everyone that joined us today for this insightful discussion. Your active participation and insightful contributions made this session a valuable learning experience for all. Thank you so much for joining us. We appreciate your commitment to building a more secure financial future. And we trust that the valuable information shared today will guide you in making informed decisions about your financial well-being. I would also like to express our gratitude to the keynote speaker, Mr. Yinka Dawodu, Assistant Director of Underwriting and Marketing at African Re, for delivering an informative presentation on the event theme, Winning Through Insurance, its crucial role in securing financial stability. We believe that this presentation provided valuable insights into the pivotal role of insurance in attaining financial stability. I would also like to extend our gratitude to our esteemed panelists, Mr. Chris Owamana, MDC of Orient International Loss Adjusters Limited, Mr. Oluwarotimi Adewale, the CEO of Samvic Insurance Brokers Limited, and Mr. Augustine Anikwe, Head of Corporate Underwriting, Coronation Insurance. Your valuable perspectives have enriched our discussion and deepened our understanding of the tangible benefits that insurance offers in safeguarding financial well-being. Furthermore, I would like to express our appreciation to Mr. Wole Famurewa, our moderator, whose skillful facilitation ensured that our discussion remained engaging, informative, and productive. Lastly, but not less importantly, I would like to extend our gratitude to Olamide Olajolo, the Managing Director of Coronation Insurance PLC, for his welcome address that set the context for this event. Together, let us continue to champion the cause of financial stability through the strategic utilization of insurance solutions. Once again, thank you all for your participation, and we look forward to continue this journey of learning and collaboration in the future. Do have a wonderful day. Thank you, everyone.
Thank you very much, Ipumi, for those closing remarks and for that chart at the end. This is not a time to be uninsured. This is indeed a time to be insured, to review your policies, and to ensure that insurance can provide that financial stability that we need in these very uncertain times. I want to say thank you again to everyone for joining us. I hope it has been valuable, and we look forward to having you at the next event or the next iteration of the Coronation webinar series. Thank you.
Thank you, Wale.
Thank you.
Thank you.
Yeah.